What is going on for this episode? We're going to be going over orders, risk management, stop loss, and TP. So if you're confused just about entries, how to enter into a position, really, this video is going to be for you. It looks like a lot, but it's all going to work hand in hand, and it's going to be a lot easier for me to teach all of this at once than separately. All right, so let's get into this. So let's say you are, trading the stock market, and you believe that it is going to go higher. You believe that we're going to keep going higher. So you can actually enter into a buy position, and you click your little buy button right here, and you'll see we have two things. We have either sell or buy. So I think that the market is going to go up, so I'm going to go in for a buy. And there's a bunch of different orders, right? And you can have a units, which is how much units you want to go in for. And as you can see here, we have a take profit and a stop loss. All right, so let's say I want to go in for 1 unit. So for orders, right? This is just what an order looks like, right? We can dock this to the right for now. And we have take profit and stop loss. So if you think that the market is going to move up to here and you want to take profit at this level and you want to get out of your position and you want to sell your contracts, then what you can do is have a take profit level, and you can go in for a buy order, and then you can have a sell limit, right? Because you're buying contracts, then you sell it off. So it'll be a sell limit at this level. So you can go in for a buy order, and then you can also have a sell stop at this low, right? Because then you're selling off those contracts if you hit this low. So if you think that the market is going to move up here and it won't move any lower than here, then what you can do is go in for a position order here. And let's say the market is like literally right here. So, 21,977, you don't have to do that because you're going for a market order. So wherever you place your order, like wherever that candle is, you're getting in right wherever that candle is. Take profit is going to be at 22,044. 22,044. Or, we can just do 67 or 270 ticks. So the one on the right here, 270, that's going to be your ticks. So that's what you want to focus on, ticks. And then 67 is points. But when you're placing your orders, it's in ticks. So 270 is the amount of ticks. Ticks is always more than points. But yeah, 270 ticks. And then your stop loss is going to be 200 ticks. So you can place that. And as you can see here, we're risking $1,000 to make $1,300. Not the best risk to reward, but it's gonna work. 1-to-1's never hurt anybody. And then you get into your position, and boom, you bought your contract. You click buy, you buy it, and then it places your order for you. So this is like, you can do it like this. There's also a way where you can just get in instantly. So if I would just buy it right now, boom, I'm in instantly, and then I set it manually. So I'll right click. If I'm in a buy position, I'll go trade, and I'll go in for a sell stop. So I actually need to I'm in paper trading right now, so I can do this, but buy position, and then we have a sell stop, and then we have a sell limit. Okay, so if I'm in a buy position and I don't believe that the market is going to go lower than this area, then I'll put a sell stop there, and then if I think the market is going to hit this high, I'll put a sell limit there. Now, I can also get in for more contracts. Let's say I want to get in for 3. And then I want to maybe, let's say I want to secure some profits at around this level. Then I can sell, the majority of my position, but not all of my position here. And let's say I want to secure some profits at like a 1-to-1 risk to reward ratio, right? So let's say around a 1-to-1 risk to reward ratio here. I can sell 2 contracts. And so I can have, oops, didn't mean to do that, but I can have a sell limit here for like 2 contracts. And then, have a final take profit being all the way up here. All right, so I'm just going to demonstrate how this looks, though, because I wouldn't obviously have a take profit here, but let's say, look something like this, just for demonstration's sake. Let's see if we want to go back and hit this high. I don't know why the market just stopped moving the second I placed that. So we'll wait here for the market to do its thing. There we go. I'm out there, right? So I'm out there, and let's say, and now what you can also do is move your stop loss to break even. So I move my stop loss to break even, and then if I move my stop loss to my entry point, I won't lose any money. There's sometimes you will lose a little bit of fees, But yeah, and then I can close out of my position, lose a little bit of money from fees, sorry, and then I can close my position out fully there. Boom, I'm out. And that's basically that. Now, for a short position, what that is going to look like is instead you will have something that looks like this. Ow, I just fucking hit myself. I just like sneezed and like, bro, my chest just went into that. All right, so let's say you want to short the market and you're going to get in here. All right, and you think at this point the market is going to move lower, then, you know, it's the same thing, just vice versa. You think the market's going to go lower, maybe down to this low, maybe even lower, and you have a stop loss here, and you have a TB maybe all the way down here. Maybe there's some sell side resting here or something, right? So you can get into your position right here. You click trade down here, and if you have instant orders placement on, remember that it won't pop up as a trade, like as a thing on the side. So you'll have to click this, and you click, you know, market order entry, and you'll have your entry be here, and then you can have a take profit at, let's say 403 ticks, and then a stop loss at 202 ticks. All right, and then you can do that. You know, let's say I want to go in for more risk. You can adjust your risk like that. I think it's, you know, 150 ticks is $750 USD. 10 ticks is $50 for one contract, so that's just something to note. One contract or unit, right? And then, yeah, then you get into your position. Now, that's what a market order looks like, and then you can obviously do your risk management from there, right? What one tick is $50. 10 ticks, sorry, is $50. 10 ticks equals $50. So I usually risk around $750 on like a 150K account. So what that looks like is I'll have 150 ticks be like my max amount with like one unit. But let's say I have like let's say it's like my entry, I have a little bit of a better stop loss, and then let's say it's 56 ticks, then, you know, if my stop loss is here and it's only $280, then maybe I can risk a little bit more, right? Or let's say I can risk like 3 with a 56 tick stop loss. Now I'm risking around 840. Still a little bit too high for me. You know, maybe I want to risk a little bit less. Then boom, we got 560, right? So you can also get even more precise entries with some, and not entries, sorry, but like orders with MNQ. So MNQ H2025, you're gonna get a lot of precise entries. Or sorry, I keep saying entries, but orders, because one MNQ contract equates to 10 MNQ contracts equates to one mini contract. So 10 micros equates to one mini contract. Okay, so, you know, I can get 10 contracts in here, and I can have like a bunch of take profits, and that's kind of like the benefit of trading with micros, is you can have like a bunch of take profits with 10 micros. Whereas with one mini, you can only have one take profit, right? So that's just the benefit of trading with micros, if you guys were wondering. And yeah, so what was I going over? Stop loss, risk management. Yeah, so that's how you do your risk management. And risk management, like overall, guys, risk anywhere from 0.5 to 1%. I always tell people 0.5 to 1% is the sweet spot, especially when you're trading, you know, funded accounts. Definitely only risk 0.5 to 1% until you build a buffer. Then you can maybe risk a little bit more. But 0.5 to 1% is definitely the sweet spot, okay? From there, yeah, this is what this is going to look like. So you'll have a buy limit right here. And then you'll have a sell stop, or sorry, a buy stop above. Okay, so let's go into a short position here. All right, let's just get into a short right here. So I'm going to click sell. I'm going to just get in with, you can do this. So there's two ways you can do this. You can either do it like that, which is like a bracket order, and it'll like pop up like this with, you know, your stop loss and your take profit. And then boom, you get in and it's like already set up for you. And sorry, you can do it with the market. Yeah, so boom, tapped in there. Or what you can do is you can just get in manually without doing that, without doing the orders, and literally just get in with like an order placement, instant order placement. Sorry, I want to sell. So I'm selling a contract here, selling 2 contracts here, boom, right? So I'm betting that the market is going to go down, and I don't think that market is going to go higher than this, but I think the market is going to go lower down to this, right? So what I can do from here is set a buy stop, and then a buy limit if I'm in a sell position, right? And then let's say I get stopped out. Oh no, I'm stopped out, right? And then it gets me out of the position. And also if it's a buy limit, it gets me out of the position, like how we showed, right? But yeah, really self-explanatory. I know this probably seems like a dumb video to make, but I mean, maybe not. Maybe a lot of you guys are struggling with this. I know I was personally struggling with this, so that's why I'm making this video, because I was just overall confused on what all this shit meant. But yeah, hopefully this is helping you guys. And then in terms of stop loss in TP, I'll always place my stop loss at like the swing of whatever I'm trading in. So let's say I'll take like a 1 minute inversion. Like, let's say I take like a 1 minute inversion here, right? So let's say, I mean, it really depends, but let's say it's like a 2 minute inversion here. What I'll do is I'll have my, I'll place my order here when we invert the candle. Then I'll place my TP like here usually, or a break even point there, and then a stop loss at the swing low. Sometimes I'll have a stop loss at the order block. I know we haven't gone over that yet, but we'll go over that soon. Sometimes I'll have a stop loss like that. And yeah, that's how you can have stop losses, just at swing lows and swing highs. And then take profits will be at those liquidity pools, right? And just areas where you can expect rejection. And yeah, that's how you place a trade. Also, let's go over limit orders. So limit orders is the other form of orders, which is basically, you can get in for a limit order. So how a limit order works is you basically place a pre-existing order here. So let's say I'm betting, at this point I'm already betting that the stock market is going to go lower at this level. So let's say, you know, we have a fair value gap here or something, right? So you can expect that the market is going to bounce away from here and trade lower. Well, what you can do is place a sell limit here. So boom, I have a sell limit placed by having limit, and then you can put the price. So the price is 21.98, 21,988.75, and then let's say I'll have a stop loss of 155 ticks, and then I'll have a TP of 385 ticks, and then boom, I'll have a sell limit here, and then it'll place me in the order once price actually reaches that level, and then boom, once it reaches that level, it's putting me into position, but not until it reaches that price. It'll put me into position. Jesus Christ, I can't speak. And then same thing here for a buy limit. It will just be the same exact thing, right? I don't really think I have to do that. I'm going to show you, but yeah, right? So for example, let's just do it right now. We can, and I always just use like right click, so you can just right click here, trade, and then boom, I'll put a buy limit here, TP, stop loss, and let's see, boom, and it places me into the order, and I'll have a TP up here with a stop loss down here, and look at that, I'm so good at trading that I'm already in profit, and let's just get out of this position, bang. Anyways, yeah, so that's that. That's what a buy limit looks like, and then obviously a sell limit, you can do the same thing. You right click, you click trade, and then you click sell limit. So, you know, let's say I think at, I don't know, we don't even have a fair value gap. We kind of do have a little mini fair value gap here. I think that price will reject this area. I mean, I'm not going to wait that long. All right, but you get the point, okay? And that's that. You get into your order, okay, and whatever. Anyways, that's going to wrap up that video. I hope you guys enjoyed this. Pretty simple stuff, but it's definitely necessary for you guys to understand. Yeah. Peace out, guys.